Snap, the parent company of the wildly popular social media network, if you will, Snapchat, may be going public. That's according to a report in the Wall Street Journal. The offering may come within 6 months. So joining us now to break it all down is Dan Seifert, the senior editor at The Verge. And I got to say, this report says the company could be valued at around $25 billion. That would be much higher than what Snapchat's valuation was most recently. That was around $18 billion. What's your thought? The valuation, is it getting way too sky high at this point?
I would say that the valuation's not a surprise at all. It seems like Snap and Snapchat just keep going up and can't seem to be slowed down. And of course, they've been an investor darling so far. And if you compare to Snapchat to Facebook's IPO from 2012, they IPO'd at $80 billion, or a little bit more than that. So they're not quite as high as Facebook, but still, obviously, a $25 billion valuation is very high.
It's a head turner for sure. And of course, social media always brings up these questions about valuations, but it's also about social media versus other things. Snap can't seem to really shake its social media image. It is one of the big platforms out there, but one of its newest products, it's a video grabbing set of sunglasses. They're called spectacles, right? I mean, will Snap always be a social media company? Are they getting into consumer hardware? It seems like it's a commoditized business. Where does Snap go from here?
That's a good question. Snap has been trying to shake that image of being a social network to compete against Facebook, to avoid comparisons to Facebook as best as it can. The rebranding from Snapchat to Snap Inc. now was very recent. The spectacles, as you mentioned. I think the company really wants to be known as a company that is there to capture your memories and to share them in an easy way without being a connected tissue type of social network that Facebook is. But for the foreseeable future, I think people are still going to view it as a social network, and it's going to take a lot to get it to move on to a different perception.
It's an interesting mix, right? Because on the one hand, I have visions of the flip cam back in the day. Even GoPro has its own set of worries with regard to whether its commoditized hardware can innovate fast enough. So let's talk about what competition is going to look like in the near future, maybe a bit beyond. What would you say is the biggest rival that Snap Inc. could have? Is it a Facebook, or is it heading down perhaps more of a software path or a hardware path like Apple is?
It's definitely still Facebook. You can see that Facebook's moves are constantly trying to copy Snapchat's features. The innovative things that Snapchat has done have been replicated by Facebook. Facebook for years has been trying to get into ephemeral messaging that Snapchat built its name on, and it is constantly coming out with different ways to copy Snapchat's ideas. So I think that for the foreseeable future, Facebook is Snapchat's direct competitor. I think it's going to be its biggest competitor. I think the spectacles are very interesting. However, I don't see Snap becoming a consumer hardware company in the same way that GoPro is. I think the spectacles are just another avenue for Snapchat to get its users to more addicted to its service.
All right, so it sounds like they've got a number of irons in the fire, but for right now, investors are going to have to digest whether or not that kind of a valuation, if it does come to fruition, is worth it. Dan Seifert, thank you so much for joining us here on Snap Inc. That's Dan Seifert, senior editor over at The Verge, and I'm Dominic Chu. Thanks for watching. Have a great day.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.